Welcome back, everybody. It's the fourth day of the Digital Investment Week, today, 5th of August 2021. Now, we have our final presenter of the day to be sharing his views on the impact investor and how it can propel the country forward in its journey towards becoming a high income economy. Yesterday, he reached out and connected to me through LinkedIn. Now, to all of you out there, do connect among other participants, network, visit the networking lounges virtually. Who knows, you might benefit from a collaboration. If you're a new graduate, who knows, you might be in search of new employment opportunities. With that, ladies and gentlemen, please welcome Nizam Reza, the head of value creation, VentureTECH Malaysia. Over to you, Nizam.
Thank you, Encik Hasrul, and thank you also for accepting my LinkedIn invite last night. My name is, maybe I should start, of course, by Assalamualaikum warahmatullahi wabarakatuh. Good afternoon. I think on behalf of VentureTECH, it's perhaps not too late to firstly wish MDEC congratulations on your Silver Jubilee. It's been excellent 25 years of developing Malaysia's digital economy. And also thank you for inviting VentureTECH to actually take part in this investment week segment of the Malaysian Tech Month. So without further ado, just brief. I'll start off with a brief introduction as to VentureTECH, and then I'll basically move along, trying to take this opportunity to explain how investment, be it foreign direct investment or private equity, can be an enabler to a digital economy, particularly in Malaysia. And along the way, I'll try to link it to the various plans, initiatives developed by the government, and to a certain extent as supported wholesomely by MDEC. So as I said, a brief introduction to VentureTECH. So I'm also learning how to use this internet clicker. So if you can bear with me. Right, I got it. So VentureTECH was incorporated about almost 10 years ago, and we always like to call ourselves to be a trusted investment partner. We are a strategic enabler via our equity investment to drive the growth of emerging industries in high value added and high growth areas. We look for the dynamic, resilient and far-sighted Malaysian companies who are open to a collaborative and innovation driven relationships with not just us, but also the ecosystem in general. Of course, being investors, we are profit driven, but definitely guided by best practices and social values. And we are committed to long-term goals and a common aspiration. On this note, perhaps it's also worth mentioning that we are perhaps the third, one of the PE firms operating in Southeast Asia that is part of the GIN network, that is part of a global impact investors network. In terms of focus areas, it's probably good to highlight that we primarily focus our investment activities in 3 industries. And when we started out in 2010, we had a focus on biotech and bio-based industries. Then as we moved along in our journey, we expanded our investment horizon to also include green industries and emerging industries. I believe some of you in the audience will probably be very familiar with some of our existing portfolio companies. Do visit our website. There's a lot more information on the companies that you see on the screen right now. In terms of also, besides industries, we are also guided by future industry and technology trends. As you can see on the screen right now, when we carry out our investment analysis, we look into what are the emerging trends, and of course, then we will link it to the industries that we are mandated to invest in. Just as by way of example, and I think I can draw an analogy where in terms of all the three industries, there are a point where digitalization plays an important role in actually growing these industries, be it green in the green industry, renewable energy, clean technology, or in the emerging industries, like for example, automation and robotics, where it is actually the, if I may use this phrase, the in thing right now. So as we move along, right, so this is where I need to refresh. Right, so if I can just start on a macro-based perspective on Malaysia, we have actually been supported greatly by our strong domestic demand, and also complemented by growth in external trade activities and its strong banking financial system. However, I think we've been facing this unexpected pandemic. I think had a chat with Encik Hasrul. It's 18 months that we are fighting in this current climate, and it has unfortunately caused a downward spiral in the global economy. As a result, as everyone can see, our GDP contracted by approximately 5.6% in 2020, and the impact is felt by our labor force, where the unemployment rate has actually increased to 4.5% over that period of time. Specifically, in terms of the pandemic's impact on our economy, we undoubtedly derive a lot of our income as a country from our export activities, and also strong domestic demand, which again had experienced a contraction based on the statistics based on the Purchasing Managers Index since January 2020, which is just before the onset of the COVID-19 related restrictions imposed by the government. We saw a rebound in May 2020, which also coincides with the government's relaxation of the movement restrictions. Unfortunately, we then experienced a dip as the numbers of cases increased, and the government had to take some remedial actions to control. On the right-hand side screen, you can see that in terms of contributor of our annual GDP, there is a steep decline, particularly you can see right in the middle there from the contribution from the construction industry, which is pretty much obvious because of the lockdown, movement controls. People can basically continue with the existing construction projects. Now, as a country, we have actually faced a headwind in terms of our competitiveness in the E&E sector, manufacturing and export, which in a way indicates a premature industrialization. We've yet to adequately transform our engine of economy from factor accumulation to innovation and productivity growth, which I think the government has tried to basically make the change from pretty much manufacturing to knowledge-based economy. However, in this context, this pandemic may even provide an opportunity to implement much needed reforms. In terms of the future prospect of our economy, I'll split it into two in terms of growth, in terms of prospects as well. In terms of growth, we expect that it is expected for the economy to recover in late 2021, with growth ranging from 4 to 5%, driven by, I would say, an aggressive vaccination program, and of course, depending on the government's revival of several infrastructure projects. Now, of course, there are always downside risks. Again, the unpredictable course of the COVID-19 pandemic with the occurrence of or the widespread infection of the Delta variant, the ongoing political uncertainty, potentially a significant increase in government debt to finance a large economic policy response to the pandemic, and also on the macro level, the unresolved US-China trade tension, which could disrupt our global value chain participation. In terms of prospects, potentially there may be a rise in oil prices, which ultimately can bring in more revenue to the government. The ringgit is set to strengthen concurrently with the increase in crude oil prices due to fall in our inventories and higher fuel demand driven by the global vaccination program, which actually allows for the opening of markets globally. There will be, we expect, accommodative monetary policy and low interest rate, which will continue to encourage investments and also spending. While again we are on the recovery path, there are uncertainties surrounding COVID-19 and the structural impact on certain economic sectors, which we foresee as which can also pose a challenge in the immediate future. Again, the World Bank has estimated Malaysia will cross the high income country threshold between 2024 to 2028. In terms of what the government has been trying to do is actually to elevate the country from an upper middle income economy to a high income economy at some point between 24 to 28, as I've explained earlier, by implementing 6 areas of reform. And again, unfortunately, based on the impact of the pandemic, there is a highly likelihood that we will achieve that high income economy status by 2028, as described by the World Bank as a low case scenario. So despite the challenges that we face right now, we are still on track. It's just a matter of time. Now, in terms of the global economic outlook, again, the shadow of the pandemic still hovers all across countries. However, we expect that it is going to accelerate within this year at a rate of 6%, moderating to perhaps 4.4% in 2022. Again, few factors that actually allows this. Number one, the accommodative monetary policies in large economies, which actually encourages spending and investments as well. A continuous reopening of economic sectors and mass vaccination programs, as can be seen even in Malaysia. Again, there are always downside risks. The uncertainty of how long this pandemic can actually take to resolve. Potential worldwide recession. I've alluded to trade disputes between large economies, which can have a negative impact on supply chains. Impact of disruptive technologies that will change the nature of comparative advantages of certain economies. Now, in terms of prospects, I just want to stress this point that innovation continues to be a critical factor in achieving an inclusive and environmentally sustainable economic growth. Recent developments have demonstrated that the crucial role of technology in circumventing the critical issues caused by limitation in movement and failure or inundation of the healthcare system. In fact, I am speaking to all of you from home, and it just shows how much the technology has actually influenced how we actually interact with each other. Again, ongoing expansionary monetary policy, relaxed financial conditions globally, we continue to ease domestic financial conditions in emerging market economies, further supporting economic recovery. There are quantitative easing of lowering interest rate, which will in turn, again, rejuvenate the economies and increase consumption. Okay, looks like I have to refresh the internet clicker, so just bear with me. Right. In terms of private equity, I mean, the outlook is that there is an increasing level of global dry powder, which means for the PE industry, it just means that there's a more competitive landscape for PE firms looking for deals that can actually bring the returns that they are looking for. In terms of how they will actually source for deals, we expect that the deals would probably be driven mostly by recovering economies, and particularly sectors that are resilient to the pandemic, which of course includes technology, industrial goods, financial services, and healthcare. And on this point, I just wish to highlight that these are sectors that are ripe for digitalization and embracing digital, and these again would allow for the growth of these sectors on an exponential rate. Now, PE firms with a localized and niche focus will be able to leverage on market opportunities and also challenges brought about by the pandemic. Growing, floating, high potential companies in the process. We have seen over the past few years build and buy deals over the region. On this particular slide, I just want to highlight that under the last row, emerging industry, it's expected that the industry 4.0 market is expected to reach approximately US dollar 156 billion by 2024, from compared to 2019 at a CAGR of 16.9%, driven again by the growth of technologies such as robotics and IoT, which are the first and second largest contributor to the total market size. Malaysia's expected growth in productivity gains of up to 30 billion US dollars in the manufacturing sector over the next decade through the IR 4.0 technology adoption. Again, during these times, it just seeks to reaffirm the value of IR 4.0, but in a way, it has also exposed the limitations in carrying out the implementation of industries and countries, which would have to adopt the IR 4.0 at different rates, phases, and ways. Industries with high level of product variance will benefit from data-driven analytics to eliminate errors or waste, whereas industries with high labor costs will benefit from a higher degree of automation. So this is one area where Malaysia as a nation, as an economy, would have to actually pay a lot of attention. And I know, as a matter of fact, that there are some industries in Malaysia that are already beginning to actually embrace IR 4.0 in their businesses. Right, let's try to, okay. Now, in terms of taking into account the macroeconomic and PE industry factors, there are 5 mega trends that, in our view, will continue to influence and shape our investment strategy, at least in the next 5 years. In terms of the shift in global economic power from the west to the east, with the rise and continued rise of China, the re-emergence of Japan coupled with economic growth in South Korea and in India, the rapid change in demographic landscape from the movement of rural to urban, growing, basically increasing aging population, urbanization trends, where half of the world's population actually live in urban areas, rapid advancement in technology, which is disrupting the very way that we've been actually living our lives previously, or BC, as I've said with Encik Hasrul before COVID. And then, of course, climate change and resource scarcity. A lot of multinationals now are moving on a zero carbon policy beginning from now, trying to basically prepare themselves for an eventuality where these scarce resources might not be around for long. Now, we have been able to take into account all those, and in doing so, we have actually invested in companies that are in a way very much aligned to the mega trends. And this particular slide just to show the involvement of our companies, our invested companies in those areas, and they are aligned, very much aligned to the to disruptive areas with big addressable markets. Now, the next few slides is just our take on the impact on a few sectors, and I'll start off And when I say impact, it's the impact of the mega trends and the shifts in technology. I'll start off with the impact on mobility. Over the next 5 years, we see advancement in technologies that will actually influence how we go from point A to point B. We don't even need to drive our own cars by courtesy of the autonomous vehicles. We can also chuck away our car keys, where vehicles are fitted with biometrics and smart sensors. We can also look into technologies that promotes climate change and also conserve resources. There again, I've alluded to the point where there has been a shift from the rural to the urban. That shift might even end with increase in intra-regional travels, where person can live in the rural area and commute to the urban area for their workplace, and with greater ease, in fact. Demographic shift, we've read over in Europe, there has been a great reluctance, particularly by the young employees, of going back to the office even after being asked to do so. This is actually a trend that most companies have to pay attention to. The balance between being present in the office, or like you and me right now at home, what is actually the metrics that needs to be measured? Is it deliverables, or basically being at your workplace 9 to 5? Urbanization and climate change and resource scarcity, again, points that I've alluded earlier. And of course, most of us probably live in urban areas where traffic engineering and traffic management systems are actually a premium. And those are critical points that would sometimes determine whether you actually want to live in an urban area or go back to the rural areas. Now, there are plenty of opportunities presented by IR 4.0, which can be illustrated by the evolution of industries from a vertically driven supply chain to one that is highly complex, interdependent, and technologically convergent. And this is where digital plays an important role. We've seen that now there's limitless form of partnership and collaboration between large and established players and emerging technology service providers, which I will actually share with the audience much later towards the end of my presentation. As you can see, I mentioned earlier about not owning, you can chuck away your car keys, but there might be a day where you don't even have to own a car. This is where the concept of everything as a service comes into play. Mobility as a service is already a growing trend within the urban areas in this region. Oops, I think I skipped one slide there. Right. So I started off with the impact on mobility, and I'll carry on with the impact on manufacturing. Again, what we see are a lot of potentials on digitalization in the manufacturing industry, driven by the shift or the attention paid by large corporations to sustainable manufacturing practices to ensure less wastages, to ensure efficient production. They are looking for disruptive technology that adds new functionality to their processes. There could also be, in our view, a shift in global economic power from currently where they say China is now the manufacturing hub of the world, to perhaps even the ASEAN region. Again, a common theme, as I've shared earlier, the demographic shift, a large labor force due to the growing working age population in the region. And ASEAN as a region itself is a growing region due to low wages, lower cost of utilities, in fact, lower cost of setting up businesses, and increasing tax relief and incentives provided by the governments in the region, as do Malaysia's government provide too. Urbanization, again, a common theme, the proximity to, in this case, customers, faster time to basically sell your products from point A to point B, shifts towards sustainable manufacturing practices, and again, a common theme that I've shared earlier in this slide is the need to increase production, but at a low consumables percentage that can actually derive savings and profitability. Right. What this slide is trying to elaborate or trying to illustrate is that we focus on investments to advance strategic sectors, especially to IR4 components such as automation and data analytics. There are opportunities for certain industries to be disrupted, to be upgraded in a way, such as healthcare, agriculture, agri-food, and high-value manufacturing and services in the areas of digital transformation, localization of critical products and services, and knowledge and technology transfer. And if you can probably squint your eyes, you probably see that there are areas of opportunities in less digitized sectors. So these are sectors that are ripe to embrace digitalization and actually go forward with via IR 4.0. This is actually a theme that is not only close to VentureTECH, but I think to Malaysia in general, where in alignment with the global megatrends of urbanization and global population growth, again, something that is mimicked within Malaysia, it is vital that we continue to modernize the agriculture sector to cater to, number one, the increase of demand in food production, and number two, to reduce the income disparity between the rural and urban population. There needs to be an increase in the self-sufficiency level. They need to again increase the productivity of our agricultural industry, and there is an upside potential by modernizing the sector, by again embracing IR 4.0. In terms of statistics, approximately 1.7 billion ringgit have been invested in agri-food tech in 2019 in the ASEAN region itself, and we see that there's a 33% year-on-year investment growth for this particular industry in ASEAN. And I just want to quote the Right Honourable Minister of Agriculture and Agro-Based Industry, where the adoption of modern agriculture technology would help us to achieve self-sufficiency level of between at least 75 to 80% by 2023, and in turn reduce our dependence on imported agricultural produce. So the main takeaway is that there is an abundance of opportunity for this industry to actually take on or embrace IR 4.0 and actually ensure, at the very least, self-sufficiency status for the country. This is something also close to us in VentureTECH. Again, unfortunately, against the background of the pandemic, we can see that it has somehow, on a positive manner, spurred innovation, strengthened the case for the adoption of technology, especially in healthcare and healthcare service delivery globally. In terms of the Asia-Pacific industry trends in healthcare, I think I've alluded to this point earlier as well, that there has been a consolidation of healthcare providers to execute, buy and build strategies and achieve scale. There has been a remarked, or shall I say, a marked increase in the investment in health-related digital platforms. There has been a proliferation of innovative solutions, in fact, that would allow the Asia-Pacific region to close its healthcare gap. And I'm just quoting here a latest statistics published by the World Bank. Current population of the APAC region itself is 2.34 billion, and then that's at 2019, and that's the most recent stats issued by the World Bank. And again, mega trends that are impacting on the healthcare industry. There's a global population growth, and on the region, as I've shared with you, the population is tremendously huge. Certain countries in this region are already facing the aging population dilemma, increased urbanization. And when we say urbanization here, is also with a focus on ensuring that the rural folks have also equal access to quality healthcare. The integration among service providers in the healthcare value chain, from your doctors, in fact, from patients, doctors, and to pharmacies, increased application of genetics engineering and biotechnology in the development of alternative treatment and preventative medicine. Again, some figures to share with the audience. In terms of the global digital health market size, it's valued at approximately 96.5 billion ringgit in 2020, expected to grow at a CAGR of 15.1% from 2021 to 2028. Right. In terms of digitalization itself, it permeates within economies, and undoubtedly it will accelerate economic growth and recovery. IR 4.0 market is estimated to grow at a CAGR of 20.71% over the next 5 years from this year, with Europe being the largest market and Asia Pacific being the fastest growing market. And for us in Malaysia over here, we have the industry forward framework, which aims to achieve 30% growth in labor productivity, increase high-skilled workers in the manufacturing sector to 50%, and ultimately increase contribution by the manufacturing sector to Malaysia's economy from 254 billion in 2016 to approximately 392 billion by 2025. And the government has initiated funding schemes and initiatives aimed at encouraging companies to adopt new manufacturing technologies and processes. And again, a critical element in any growth strategy is R&D as part of the Industry Forward program, which is outcome-based incentives, which includes outcome-based incentives, including tax benefits, to encourage investments and adoption of Industry 4.0 technologies and processes. So the next slide, ladies and gentlemen, is my attempt at trying to, sorry, I must have missed this slide. So what this slide seeks to elaborate is that the government has actually taken stock of the need to actually bring the country status from that of a middle income to a high income nation. So it is crucial for the government to have plans and have policies where the investment considerations are centered around the nation's developmental priorities, as outlined in the Shared Prosperity Vision, the Malaysia Digital Economy Blueprint, and National Investment Aspirations. Again, they are broad goals, but I can probably summarize them into 5, which is to create high-skilled jobs, provide better income for the rakyat, improve inclusivity to contribute towards the socio-economic developmental agenda, expand and integrate domestic linkages into regional and global supply chains by improving their resiliency, develop new and existing clusters focusing on productivity sectors, including local products and services. And again, a point that I stressed earlier in the earlier slide is increase economic diversity and complexity through research, continuous research and development and innovation. As I've shared earlier, this is an attempt to try to elaborate a little bit on our FDI performance for last year. And it's still a challenging outlook, which actually hinges on a stable political environment within and macro conditions globally. And of course, incentives by the governments are key thrusts to ensure that increase in FDI. So in terms of the important stats, FDI in Malaysia registered a net flow of 14.6 billion in 2020 compared to 32.4 billion previous year, which is actually a contraction of approximately 55%. Again, mainly due to the global economic uncertainties arising from the pandemic situation. It's worth noting that services and manufacturing were the main contributors for FDI flows in 2020. Top investors of FDI are from Singapore, the US, and China. And again, the future driving force for FDI in Malaysia, we can actually link that into three factors: stable political and macro economic conditions, increase in the numbers of skilled workforce, and again, government incentives. Now, in terms of foreign direct investments from the Malaysian context, again, through the various initiatives set by the government to date, we have actually successfully diversified our economy from primarily an agriculture and commodity-based one that now plays host, again, via FDIs, to a robust manufacturing and services sector, which have propelled the country to become a leading exporter of electrical appliances, parts, and components. FDI have also been instrumental in employment creation and income growth, with about 40% of jobs in Malaysia linked to export activities. Now, that is in terms of hard cold investment, as in monies being put into the country by these investors. But our take is also that FDI is also bringing non-monetary benefits, as I will share in the next slide. Right. I alluded to the point that FDIs don't, in the traditional notion of FDIs is they bring cold hard cash, they set up shop, manufacturing plants, generate income for the employees. But on this slide, I just wish to highlight also that there are also non-monetary benefit to a certain extent that is beneficial to our local, particularly digital companies. And I would like to say this, that FDI should also be seen as an enabler to the Malaysian digital economy, and not just as a way for a country to balance its payments. I gave 3 examples of how FDIs have actually positively impacted our local digital companies. I took this from The Edge. They gave a full interview with Mr. Chu Jianwang, and I classified FDIs as being an experience giver. Mr. Chu actually worked as a specialist engineer at Hewlett-Packard, and in his tenure there, he actually took a trip to the HP garage in Palo Alto, and that's where he started basically his entrepreneurial desire. Came back, and together with 3 of his friends, incorporated VentureTECH, and as you can see, VentureTECH is a leading automated vision test equipment company listed on Bursa Malaysia in 2005. And why I say it's an experience giver is that he started off with an MNC, cut his teeth there in terms of managerial skills, and which I believe he had actually brought into VentureTECH. And as you can see, it is doing wonders in Bursa and also for Malaysia. FDIs, or shall I say MNCs that set up their operations here, also act as a consumer of our services. I've shared TXMR is one of our investee company that is into robotics and automation, and we count a few marquee brands in the automotive industry as its clients. Obviously, TXMR solutions, automation solutions, actually gains project reference for export purposes. So the validation by way of getting jobs with these marquee brands actually has a positive impact of providing it with project reference that they can actually export their services abroad. I think everyone knows Aerodyne, and this is where I classify FDIs or MNCs that set up shop in Malaysia as a partner. I think last year DHL had inked an MOU with Aerodyne on exploring drone delivery with focus on life sciences and maritime supply chain. So there are other opportunities that our local digital companies can actually employ, or shall I say exploit with this MNCs that operate within Malaysia, and it is actually an opportune time right now where the government is actually attracting a lot of FDIs into Malaysia. We've just got to know that Lam Research opened up their manufacturing plant in Penang, a 1 billion ringgit manufacturing plant. You might never know. Our next digital startup could start from that manufacturing plant. Now, I think the next few slides is just to share with the audience in terms of, as I've gone through the slides, I've shared about how FDIs actually put in capital into the country and they create employment. It is a source of capital, nevertheless. Now, why private equity? I think that's a question that most startup owners, founders would normally ask. Why private equity? Why take money from private equity or VCs for that matter as well? Now, I think there are a host of reasons, but I think we can narrow it down to three as to why partnering with the right PE firms offers several advantages to companies, particularly digital companies in Malaysia. Again, PE firms, we're not all from the investment background, so we are made up of a diverse background, but we bring in professionalism, networking, and strategic experience, which is actually as equally valuable as the capital that we bring in. PE firms take long-term view on performance targets and sustainable growth. Generally, it's not just about $1 in, $10 out. I think the other point that I need to stress here is that PE firms create value by enhancing operational efficiency and improving financials of the company through, again, linking it to the diversity in background. VentureTECH is made up of people with so much experience and diversity, and that wealth of experience has been put to good use in all of our investing companies. And again, we constantly through our value creation activities, and I believe it's not just contained to VentureTECH strictly. We try to create as much synergies with private and government stakeholders in the areas of funding, market access, supply chain, business collaboration, technology, and capacity building. And in some cases, it is a varying degree of what is it that our investing companies are looking for. Some of them is not a question of funding. It is about market access. Some actually require capacity building. As they grow up the cycle of their life, of the company's life, they require additional human resources, for example, qualified human resources, which any PE firms can actually provide. So I think this is the point where I need to refresh the internet. Click up. Okay, right. So I mentioned briefly about value creation at VentureTECH. We complement our value creation strategies that are, I would say, collaborative, synergistic in nature, which drives our long-term and holistic strategies. We always strive to have strategic collaborations with partners, be it within Malaysia or outside of Malaysia. We have, I think, signed an MOU with SBI Ventures Malaysia, wholly owned subsidiary of SBI Inc. Holdings of Japan. And we are looking at setting up a joint venture and actually making co-investments regionally and within Malaysia to improve liquidity and expand our mandated socio-economic role. We have also partnered with industry associations within Malaysia and overseas. Korea Bio is one example to entrench a presence and ensure effective product or service applications. It goes without saying that we have a collaborative spirit within VentureTECH, and we continuously look for opportunities to work together with public and private entities to plug the funding and support gaps within the ecosystem. Example, working closely with ministries, GLCs, fellow government agencies. A good case example is how we have actually worked closely with MDEC via their Global Acceleration and Innovation Network. And of course, ultimately, we also look for strategic partnership amongst investing companies to unlock synergistic potential. And we have actually on a few occasions partnered them up to actually go into new ventures. And alhamdulillah, there has been positive responses and also success stories arising from that. So I would like to conclude the presentation or I would like to say more of a sharing session today, that undoubtedly there is an interplay between PE investments and our quest to develop our digital economy. Gone are the days when PEs were seen as purely returns driven. As I've shared earlier, $1 in, $10 out. Instead, it brings together positive social and environmental impacts, most importantly, and more relevant to today's theme, technology and knowledge transfer, and of course, validation for our local digital companies. Malaysia undoubtedly has a vibrant funding ecosystem that spans a company's life cycle from startup, growth, mezzanine, and basically even over beyond our shores. And PE firms can play, or in fact, if I may not be wrong to say, are playing an important role in nation building, accelerating the country's journey towards becoming a high-income economy by investing in the growth of digital companies. So with that, I wish to thank you, the audience, for your patience and time in listening in. And of course, before that, I'll be more than happy to field any questions. So over to you, Hasrul.
Okay, thank you, Nizam. Thank you for the enlightenment of the enabling the digital economy. We've been talking about this thing for a few sessions, the ESG, the environmental, social responsibility, the corporate governance. So it's not just about the dollars and cents, the return, the ROIs. So it has to be looking at the human touch beyond the bottom line. So here, to invest, you don't necessarily have to be tech savvy, but indirectly, as per your presentation, we enable the digital economy, okay, through what we invest in. Now, for private equity instruments portfolio, there's a question here. Why is a biotech investment place more emphasis as compared to green tech or the circular economy? Is it actually a venture tech specialization, the decision of the private equity investments, or the decision of the investor, or is it the external global factors?
Well, that's a good question. So I think I didn't share the in our journey we weren't always called as VentureTECH. When we first set out on our journey, we were known as A Bio, and as the name suggests, our focus back then was on biotech and bio-based industry, simply because at the point in time the government was actually focused on building that particular industry to be as a lever towards Malaysia achieving that high income nation. There's nothing wrong with that. We still do continue actively look for such investments, except that over a period of time, we decided to actually expand our horizon to include both the green industry and also emerging technology industry.
So it's an expansion based on, you started off based on your strength, and then you ventured to non-core industries. Just like previously you were talking with somebody from Australia, you started only core for oil and gas, but later on had to leverage the same similar skills in non-oil and gas industries. So yeah, okay.
Yeah.
We have another question here. We are continuously talking about IR 4.0. However, how well versed and aware about this technology is it for the people in Malaysia? How can we create more awareness to our people on the benefits of IR 4.0?
That's a rather tough question. No, but it is tough, but a valid point. I think businesses would think the industry itself would need to take the lead in actually immersing itself, having a deep dive and understanding it deeply. I think in my slides, in the earlier bits of my slide, I shared that competitiveness is one reason or one factor where a country will decide to put in money via FDI. And I think we have seen how our economy, which is mostly manufacturing driven, has actually been severely impacted because of the lockdown. Now imagine if companies operating in the manufacturing industry had embraced IR 4.0. Take for example the usage or heavy usage of robotics and automation. It would, I'm not saying that it can eliminate, but it would to a certain degree mitigate any basically any negative impact brought upon by the government's decision to impose movement restrictions. So to answer that question, it is, change is inevitable. It's not a question of if, it's a question of when. I know some business owners out there are afraid of the unknown, but it is inevitable, and it is something that has to happen now rather than later. So it is actually incumbent on the industries themselves to actually open up and embrace IR 4.0.
Yeah, of course, we've already started out the blueprint part of the awareness, a little bit more education, not just for the general public, but maybe first of all, we have to start off with the MNCs, which are here themselves. They have to adapt it. They have to see the actual results of the returns, and then they themselves will be investing for the long term, because they are the ones that have the money, because IR 4.0 has on a bigger scale, it is you don't see the profit directly. It will take a big chunk of investment for the equipment, for the monitoring, for the retraining, and everything. So it's not going to come overnight. So yeah.
Oh yes, yes. As they say, Rome wasn't built in a day. And I like the way you pointed it out, Hasrul. MNCs, when they set up shop here in Malaysia, they have a long-term perspective, and I think I've alluded to this point that they are also a consumer of the services produced by our local digital companies. I've shared TXMR as one example, where they started off with a Japanese automotive maker, and that was their big break. They introduced automation and robotics services, and from there, by word of mouth, they got introduced to other automotive brands that actually have manufacturing plants in Malaysia. Again, so there is the more we have such companies in Malaysia, I think my personal view is it makes Malaysia more attractive for MNCs to actually come over here and actually put in their investment, long-term investment, I must say so.
Because we've already seen those developed countries, Japan, Germany, especially very highly dependent on automation. So it is a high level industry, and we are relatively way behind that. But this is part of something that would spur the economy. I would say because it brings in more investment, it brings more technology. Best if we have that technology transfer as quickly as possible from these developing nations. Okay. Well, and anything else you would like to talk about in terms of investments? What do you see? Say 2 years time. We assume that COVID will have subsided. We have travel industry, tourism by 2024, airlines will be back in the black. So 2024, what do you think is going to be happening?
I am thinking very hard that it'll be 2023 rather than 2024. But anyway, since you say it's 2024, so I see that already economies are reopening guardedly, but I think by 2024, from a personal point of view, we are at the cusp of recovery. And when I say recovery is to a situation where it's BC, before COVID. But however, talking about now is an opportune time. And I think the Chinese character for crisis there too. I prefer the other definition, which is opportunity. So if we build and leverage on the opportunity from this crisis, then I think there's ample growth room for us to leverage beyond 2024, example.
Yeah, because you did mention with the acceleration of the vaccination, you already see the impact in Europe, in the UK. You see the total drop in number of new cases. Because today's numbers, I just got the numbers 20,000 plus. So it's an all-time high. Okay, yesterday on all-time high in terms of the number of deaths. But we hopefully, with a more stable government, we hope to see the vaccination, every industry to be open as we lead into the PPN phase 3 or phase 4, open up these economies, because the country is suffering. I think about almost all industries are more or less suffering. And when you talk about this, you need to talk about your daily life, daily living, before you can actually put more into investment. You need to get your companies up and running, operational, bringing in a profit before you can upscale or maybe add in more technology. So right now it's still in survival mode, and hopefully we're in survival mode, and hopefully we'll be going into growth mode very, very soon. Thank you, Nizam. Thank you.
Thank
you for your interesting presentation and insights to close off our day. Good to see you in person, in the face, on screen. With that final session concluded, I would like to say thank you to everybody, all the speakers for today, and hopefully to see you again for tomorrow's session. Tomorrow our sessions will be starting at 9 a.m. So 9 a.m. come back. Okay, it's Friday, the final day of the Digital Investment Week. A lot of sessions tomorrow, packed session. But in the meantime, do check out our agenda of the satellite events happening all around the MTM 2021 space. We invite all participants to make use of the virtual networking, as I mentioned earlier. Okay, and also you can reach out to the admin via the chat box. Who knows, maybe if you watch this video later on, okay, not live, if you have any further questions, just contact the admin. Maybe you want to present a question to the speakers. Okay, thank you. This is me, Hasrul, your host, signing out for today. See you tomorrow at 9 a.m. and stay safe. Bye, everyone.